All right, all right. Good afternoon. I'm always surprised. I jump in here first thing every afternoon or every Tuesday, Thursday afternoon. There's people waiting. So it's always good to see somebody enjoys coming and trading the markets as much as I do. And that would be you guys. So thanks for showing up. I always appreciate it. Bruce, always good to see you here. Glad to have you. And John C. Gaisley, it's great to have you. Glad you guys show up first thing in the morning saying hello. We got more people watching than what we have saying hello. So if you guys want to go ahead and say hello, I'll make you famous. All right, here we go. Let's take a look at the markets today. I thought today would be just a fun day just to see if we couldn't trade. You know, we've been spending a lot of time doing a little bit of lecturing and going off into different markets and looking at gold and silver and corn and wheat and soybeans and all those fun markets, natural gas, right? But today I thought we'd just spend a little bit of time trying to do a little day trading, a little scalping. I had a student that I was working with yesterday, and he was asked me what the difference between scalping and day trading was. And he's been working with somebody who's been helping him with scalping. David Duty, for those of you who don't know, is a buddy of mine, and we work together at Trade Mentors. And he teaches a class. Of course, you have to pay to watch him trade because that's what he does. He's the one who manages our live classroom. So if you want to go and watch a live classroom, be a little bit more structured. I mean, David's a little bit more structured than I am. I'm kind of all over the place. I teach all kinds of things. David just focuses on one thing. And so he just has a trading room and they just trade. All right. And so if you want to do that, you can go over and you can learn more about David Duty at davidduty.com. And that's where he's at. And he runs the trading room. But I am the educator who just kind of jumps and runs and teaches all about the software and different strategies. And we kind of go crazy out here and try all kinds of weird and fun stuff. So if you like that kind of thing, then come and stick with me, or you can do both. And so this guy was working with David, and then he decided he wanted to come and work with me a little bit too. So he's working with both of us. But he was asking me that question: what's the difference between day trading and scalping? And I says, well, I kind of make that distinction because I want people, when you're in my classroom, that we can kind of communicate a little bit better with each other. I'm probably, I don't know, I think some other people, out there on the traders use basically the same terminology. It's the kind of terminology I've used ever since I was in Chicago working at the Board of Trade. So we kind of, scalping is kind of, you're only in the market for a few seconds or minutes. You're just trying to catch a very short pop in the market, maybe 3, 4, 5, 6, 7 ticks, 10 ticks, and you're out. I mean, that's it. You're in, take 10 ticks, you're out. You're in, take 4 ticks, you're out. And you can do it with large quantity because the probabilities of those happening, if you get the right breakout moments, can be very high. And we do some of that in here, and I've taught you some of that scalping stuff. And we can set the software up to take advantage of those moves. And so that's what scalping is. Well, he's like, well, then what's day trading? Isn't that the same thing? Well, no, day trading, I think, in my opinion, and the definition that I like to do to it, is more trend trading only on a daily chart. So you're looking for trying to catch a longer term trend in the market, a bigger move. You're staying in longer. Maybe you're in for 15 minutes, 20 minutes, maybe even an hour or 3 hours or all day long. If you're trading options, you can kind of stretch out the amount of time that you're in the market and just take advantage of a single move. There's actually ETFs that you can invest in that do that. Zero DTE, 0 day to expiration options, where you can go and actually buy some ETFs, and that's how they trade for you. They'll take your money and, of course, trade zero DTE options in whether the stock market or the futures market. They'll do that and then share the profits with you. So there's some other companies that'll do that. Roundhill is one that is a company that likes to do that if you're interested in that type of trading. But they have 0 days till expiration options. Then they pay out their dividends once a week, every Friday. They say, okay, this is what we made this week, and we'll give you your share. It's kind of a cool way of doing it. You're not the trader. You just give them the money and then they trade it. But we like to trade ourselves, right? So we want to make money so that we have a source of income so that we can then invest it in other things, whether that's take it home and, buy dinner with it, or pay for your car payment or your house payment, whatever, or you want to take it and reinvest it somewhere else. What I like to do is if I make money trading, I take it and reinvest it in something else. It's a little bit more long-term growth. So I use trading, like what we're going to do today, just as an income source. And it's just another income source that I have, many income sources. I have properties and I rent real estate and I have businesses and I have, I work at the university and I have all kinds of different ways of multiple income streams. And then I have my investments that are income streams. I have my long-term savings, which are income streams. And so by having multiple income streams, it gives you a little bit more stability. And so this is just one more income stream. And it's a nice way of being able to trade, because if you have multiple income streams, you're not heavily reliant on just one income stream. And so if you're heavily reliant and the only income stream you have is trading, that becomes a little scary, because then it puts a lot of pressure on you to trade and to succeed. Because if you don't make any money trading today, well, heck, kids, no dinner tonight. Dad just lost all dinner money. All right. So we're not going to kind of put that kind of pressure on ourselves, because if we do, that makes it really hard. You start doing stupid things and start trading in ways that are probably not very bright. So we want to have multiple income streams. And I would suggest that, until you really get some experience under your belt, trading, day trading in particular, not be your primary income source. All right. It's not my primary income source. And so that allows me more flexibility in trading. Gives me the ability to come in and say, well, the market's really being stupid right now. It's just going sideways and I'm not really seeing a lot of opportunities. So I don't need to take a trade. I mean, it would be nice if I could. I'd love to take a trade, jump into the markets, make some money. But if the market's not performing, you're going to probably be more likely to lose money than make money anyway. So, you can set aside and say, well, my other income sources are paying my bills. This one would just be some gravy that I could put in there, invest for the long term, maybe for my retirement plan or something. And so I don't need to take risks day trading. And so a lot of people think, well, I want to day trade for a living. Well, that's, you can get to that point and that can be your primary income source. But I would suggest that maybe some of your other investments or some other sources of income as well. It just makes it a little easier. And I'm not seeing anything really fun here except for that Russell down there in the bottom left corner that's moving. That's on a range bar 6. And so we've got the 4 markets up here. Up in the upper left-hand corner, we have the S&P 500. Up in the upper right-hand corner, we have the Dow. Bottom right-hand corner, we have the NASDAQ. Bottom left-hand corner, we have the Russell 2000. We're starting to get a little bit of a bump here on the NASDAQ. Now, I'm running over here the NASDAQ Micro, not the Mini. Okay, so, well, this is coming in here with, this is 3 times a charm right here. Here's charm 1. Here's charm 2. Doesn't mean it can't go on charm 2. It certainly can. We could put a little trade in there and see if that market wants to continue higher. Now, I've got, I had the wrong, I hate it when that happens. We better exit out of that. I'm not going to stick with that one. I want to make sure the right charts, if you're going to trade, make sure the right charts pick. Now, the problem is that I've got these tools all set up. I set these up for the client yesterday, or one of my students yesterday that was working with me. And we'll just kind of stick with this for now, but they're not set up for the NASDAQ. And I just put an order on the NASDAQ. So the problem is that if we bring this full screen, you can see it's the stop's a little close. The stop's a little close for the NASDAQ. It's a big market, so the moves are a little bit larger, and I've got this set a little bit a more aggressive stop order. We're going to look see if this is what we call 2-3 times a charm. All right, so this is on the second charm. I don't know if it's going to go on a second charm. Oftentimes we'll get when you have a narrow sideways channel like this, the market likes to break once on those blue lights, break twice on the blue lights, come back, flush down, and then it's on the third run that it'll take off and go. I call it 3 times a charm. And so that's a narrow sideways channel breakout. We'll see if it'll go on this too, just because we're here. And hey, we're not going to take a big risk. I'm going into a mini account with a single contract. So you got to know your probabilities, and probabilities are how we got to trade. We always have to know what the probabilities are of whether the market's going to rally or not. The probability is breaking out on the second on a narrow sideways channel. Second charm is not real high. All right, your lowest rate. Well, I don't want to say lowest on that one, because the first charm is oftentimes just an ABC pattern. So it comes in, it goes up, rallies down, breaks the first charm, and away it goes, takes off. But then you get the failure of the first charm. It comes back and it just starts going sideways, and you get the second charm. So this is the second attempt to break out, and those oftentimes fail. The probabilities of those taking off and run, not the greatest, right? And so that's why we took just a very small. Oh, this is a mini. This is not a micro. So I thought I was on the micro here. This is the mini. So we did take a pretty good little risk there, $200. So we're looking for it to break again. So this is the first rally, first candle to break a new high is also an opportunity to get into this market. You can see there, it rallied up, broke those blue lights, come down, flushed down, breaking the first candle to break a new high. So in reality, there's another attempt at trying to break higher on this second charm. To get the third charm, the market would have to flush down here, break those blue lights, and then go up, break the next set of blue lights right in here, and then that would be your third times a charm, and away it goes. Now, if you're like, Lan, you're so full of crap. Well, don't trust me. Go back and look at how many times you've had 3 times a charm play out. There doesn't mean it can't break here. I mean, we can go in there and give it another shot right here and see if it's going to break out on the second rally out of this second charm. We'll see if it'll give us another shot at it here. And put a position in. If it'll break again, we'll add another one. We can add another one. It looks like it's going to go. We can give it another one right here. See if it wants to go. Now we got 2 trailing stops. So these are on the bulls and bears. So we'll clear back here on the blue light. So this market's really quite quiet today. It's not playing very, very strong. It's not a very strong trend. So see if that won't move a little bit for us, or if it's going to flush right back down again and give us that triangle. Take our money away and go for a third charm. Third charm would mean I'd have to come all the way back down here, break the blue lights, and rally again. And just, fill that RAF channel. We'll just put that in there like that. And it's actually, we can't have it out there because that's too far. We'll put it back here, kind of like that. That would be the RAF channel. See? So it's breaking out the top of the RAF. We'll see if it'll continue. We got our stops here on the sitting right about the yellow dot, but they're actually trailing the blue light. So they're just going to sit there. I've got them set at 20 points back. I could adjust those because the market is a little quiet here. We come in here and go edit, and we'll put one of these on the ATR and see how that goes for a second. See if this market's going to give us a little bit of a rally here in the last 45 minutes of the power hour. We'll put this up here at the green line. This green line is just coming up and testing that previous high. We don't want it to have to break that previous high, so we'll put it inside. Just go up and test that previous high. In fact, see where that body's at. We'll put it right on the body. Let's bring that one out a little further. We'll put this one at the body, and we'll take a profit if it goes up there, and that's really close to that 21,980. I'm just going to put it inside of there because that's where markets like to go. They like to bounce between these even numbers. So if it'll go up to that 21,89, we'll take a profit off there. That's just testing that previous high, and then we'll put the other trailing stop down here. It'll just trail on the blue light, and then maybe go for a day trade, right? Go for a little bit longer move instead of trying to scalp all the time. We got 200, and now oftentimes what I like to do is, me, I'm a little quick to jump out of the markets if it brings me back to green. So right now we're down 210 and we're up it's starting to flush back down again. So we're not even taking our 210 back. If it breaks the 210, I'll oftentimes just get out at 210, get back to green, wait for the next setup, and then trade again. That's a good way to do it, in my opinion. I like to do that. This is 4-bar rally right now. Oftentimes once you get 4 bars, you get that pullback. So now you have to make a decision. Do you really want to play it in anticipation of going all the way up here and sit through a little bit of a drawdown as it might draw back down into here? Or are you going to just take your profits off, get your 210 back, wait for it to draw down, get back in and go again? Yeah, it's up to you. So we're at 255. If we hit exit chart right there, look, we're up $35, got our 210 back. Now the problem with that is that if the market continues to run, we'll feel bad, won't we? We'll say, oh, crap, Lan, you should have just stayed in there. Why don't you just stay in there? But we got 4 good rally bars. We got all of our money back from our first loss. We'll just wait and see if this market wants to go a little bit further. If it pulls back, it'll pull back for us. Oh, we should have stayed in. There, let's draw our line in there. This is where we had our limit order to take the profits. Let's put that in there for the first one. That's kind of right where we put it. Let's see if it'll hit that. And then we know that we should have just stayed in and not taken our profits off. That's always a question I have. Guys, I kind of always worry about making that decision. Should I just stay in there and just let the trend run, or should I take my profits and get myself back to green and then wait for another opportunity? I always err on the side of caution, and I take my profits, get myself back to green, because I feel like, hey, there's always plenty of other opportunities to get into the market. I just take another trade, but now I got myself back to green. I'm not operating from a red zone. Let's see if it's going to hit that yellow dot, the yellow line. That's where we were going to get out and take our profits off the first contract. Come on, baby, push up there. If it'll flush back down and hit that blue light, our blue line down there, we could probably re-enter for the next leg up. Come on, push up there, hit that yellow line. I just want to see if it would have done it. Come on, you can do it. Well, if it doesn't, then I can say, well, see, I was right to get out. Come on. It just suddenly decided to do nothing. Just sit here for a minute, Lan. I don't really want to go anywhere. All right. Well, while you're doing that, I'm going to go look at some of these other markets if you don't mind. All right. Lazy market. All right. That's a range bar 25. We have to slow it down because it's such a fast market. You can see the Dow's not really doing anything. It's pretty dead. We got a little bit of a move there. It's kind of the S&P 500 is following the NASDAQ. The Russell, that's little cousin Russell. He kind of does his own thing. And he's flushing right now. Don't really want to take a short position on him, though. Although that might not have been a bad move. Let's see if it pops back there just a little bit, test that yellow dot, and we can maybe take another short position. These markets are all starting to back off a little bit. The S&P gave us that little reversal bar there on the candlestick pattern. Come on, turn off that auto scale. I got to get that turned off on everything. Turn off all the auto scales. All right, here we go. Don't auto scale on me, buddy. I want you to just sit there like this, right where I put you. Just stay where I put you. All right, what are we seeing here? Waiting for the Russell to pop back up just a little bit, see if it won't give us a little bit of a reprieve, and then we can get back in for another short position, see if it won't come back down to the Fibonacci sweet spot or the Delta Kona probability, which is that yellow line. I don't know if you can hear that. Out in the parking lot, there's a car that somebody's left there. I don't know. Their alarm's going off. And so it's out there honking in the driveway. I don't know if you guys can hear that or not. It's driving me crazy. All right. The Dow just crossed the yellow line. We're coming down and approaching it here on the Russell. Let's see if the Russell won't pop back up a little bit. Usually it likes to go up and stop everybody out and then drop again. See if it'll do that. Sometimes it comes all the way down, turns, and just starts to rally again. Don't know if it's going to stay down there, turn around. You never know. You never know. So you just have to be careful. Right now, the yellow dots are above. So that's where our stop would go, meaning we should be in a short position right now. It's just not. Got to wait and see. Wait and see. That could be your first candle to make a new high. It's not green because it's yellow because we got the bulls and bears turned on. That's if you turn the bulls and bears off, that'd be your first green candle to make a new high right there. So higher high. So it's coming down. It's broke that line right there. A lot of people will buy right there. That's a good buy signal if you anticipate the market's going to continue to make that next rally up. That's where you get in. A little early. You want it to kind of do it when the dots cross, because more people will get in when the dots cross than on the first break. Some people get in on the first break, try to get in early, but then oftentimes the market does just this. It flushes a little sideways, and then it'll break on the dots and go. So we'll have to wait and see. But I was looking for it to kind of come back and then continue to flush. I thought maybe if it came back, tested those yellow dots, we'd get a short position and see if it won't flush back down. A lot of guys want to buy right there and go long, so it might pop up a little bit. We could get in, take a short position, anticipate another drop. But we might be wrong if we do that, right? Look at the NASDAQ starting to rally once again. If we were over there trading the NASDAQ, but I'm kind of focused here on the Russell right now. I think I'm going to come in here and just for fun, I'm going to be the counter trend trader. I don't know if it'll pay off, but we're going to try it. We're going to take a short position right there as it tests those yellow dots and see if it's not going to break and come back down one more time. It might just go straight up, break those yellow dots and go up and follow that dot, and we'll lose some money. But I wanted to try and see if we weren't getting down a little bit more down. If it, not so much. Looks like I was wrong. Let's bring it full screen so you can see a little better. I thought we might get a little bit more of a pullback than that right there, and I thought that's right where it would do it. I don't want to catch a rising knife. Catch a falling knife is when you're going down, going up. Maybe it'll touch that. How far are you going to let it go, Lan? That's $40. It's just a single contract. I just wanted to see if it wasn't going to give us a little ABC top formation here, like this. Come back down into that cone of probability. I may be wrong. It may break out and go up into the next, because we've got right there, we got a new Darvas box right up here. So if it goes up there, go into the new Darvas box, and then that would start our trend all over again up there. But I'm looking for it to come back down just off this little high. It went up and tested it right there. So it kind of went, gotta get rid of that. Went right up there. Tested it. May give us a little double top right up in there. Let's see if it backs off and then flushes down with that Fibonacci projection to the downside. We'll never know. Playing the counter trend this time, not much of the trend. All right, there it's breaking down. Let's see if it goes down or if it just wanders sideways a little bit and then breaks and goes back up again. Why didn't you dollar cost average when it hit that high, Lan? I coulda, woulda, shoulda, but I didn't. Shoulda. Didn't want to catch the falling knife. I didn't want to chase a market that was running in the wrong direction. Is it going to drop here? If it is, we could add another short position and make a little bit more money as it falls. Should we try it? You think it's going to go down? Doesn't feel like it wants to do anything. It just, I mean, it's definitely a buy signal right there. We're definitely trading the wrong side of the market. But I wanted to see if it was going to fail. Trade the failure. The failure of that long arrow. It might not fail. Who knows? Nobody knows. All you can do is put your order in there and see if it's going to fail. If it does, then you make money. If it doesn't fail, then get out. Get out. There, it gets ready to fail. Still trying. It's trying to fail, but it's trying to go too. It doesn't know what to do either. Everything's dead here. We got 30 minutes. We're in power hour, guys. Come on. Come on. We're in power hour. Well, taking a good little risk here. If it doesn't go, I don't think it's got the strength to go up. So if it doesn't have the strength to go up, then it'll probably go down. No, there. It's going up. Going the wrong way. How long are you going to stay in there, Lan, with it going that direction again? Well, we may dollar cost average one more time if it'll go up there and test that green line one more time. Come on. See, we're trying to trade the failure and it's not failing. Now, if it breaks that high and takes off and goes to the moon, we're going to get our heinies handed to us. Yeah, there it goes. Lan, you did it wrong again. Doggone it. And you did it live right in front of a bunch of people. Aren't you embarrassed? No, not really. These things happen. These things happen. Sometimes you make the right decision and you make a bunch of money, and sometimes you make the wrong decision and you lose a little bit of money. Everybody gets a pick. Everybody gets a choice. Everybody gets a guess. Yeah, but I thought you were supposed to be the guru, the best guesser. I'm not the best guesser. I'm just a pretty good guesser. I'm a pretty good guesser, but I'm pretty good at showing you guys how to make good guesses and how to make guesses. Sometimes you make bad guesses. Scientific wild ass guess. Well, when are you going to get stopped out? Take your loss. Well, I got my stops up there. If it goes up there and hits them, I'll get out. We could lighten our load. If it would just pop down here for a little bit, you could take a couple off. Break even up in there. You could prop that in there like that. Just take one off in case take one off in case they comes down there. See, we took one off now. It gave us a little reprieve. You could take another one off right there and just say, look, I just take that one off. Now I'll ride the two down again. I had four, so if it really flushes, then that's just kind of lightening the load right there so that if it does go down, go back up, I don't lose a bunch of money. But we're still short. We got our short position in there. Come on, baby. Come on. Drop. Drop like a rock. I don't really want it to drop. I have real money on the long side of this. But that's my long-term position. Come on, baby. Drop like a rock. Tomorrow we get to look at our stock portfolio. Tomorrow at 8 o'clock a.m. Mountain Time. Make the adjustments for your time. Come join us. We're gonna look at the stock portfolio, and it's Friday, so we get to. I think we're gonna have some dividends we get to pay out and decide what we're gonna do with them. So come and let's decide what we do with our dividends. Should we do that tomorrow? Tomorrow morning, Friday. Tomorrow is payday. Kirk says you can't hear that honk back there. They finally went out and turned it off. So I think I got a pretty good little microphone. Well, actually, I don't know if the quality for you guys is all that great. I've been switching to lots of different microphones. I've got this one here that I can bring in, and it's a really nice microphone. But the little unit that it plugs into died on me, and I've been fighting with that dumb thing. So I don't know what to do about that. So I got this headset kind of as a temporary thing because I was traveling, and I thought, hey, that's nice. And then it's so convenient not to have this big microphone sitting here all the time. And then because it covers it up, so it's in front of my face, so it gets in the way of the screen. So I'm always like doing this kind of thing to see around it. But it sounds a lot better. I don't know if you guys can really even notice the difference or can tell, but this is just so convenient. And I think it does a pretty good job of weeding out the background noise. So you couldn't hear that car honking out in the parking lot. Well, we're up $100. Come on, $100 isn't bad for a guy like me. Come on in here. Come on, drop that down there. Edit that. We're going to come in here and be a little bit more aggressive. We're going to say, go down to the ATR dots. All right. So we changed that. So did I change it? I did. Okay, there it goes. Where do you want to take a profit land? Well, let's just move that up there. There's that 2320. There's the red line. Let's go to 2320 right there. That's 161.8 on the Fibonacci projection, but that got moved up. That's got to, oh, no, don't do that. We want to just move this. How am I going to move this without moving? There we go. Take this. We'll put this back down here, and then we'll move this back over here. All right, so that's our Fibonacci projection. And 130.9 is our golden ratio. It's kind of a target zone. We kind of like to get out right around there. See if it'll touch that. Came right down, touched that yellow line, didn't it? Right down to the one standard deviation, just like a train on rails. Now we're just at break even on our trailing stop. So if that thing goes back, yeah, oh, look at that. We just made $100. That's not bad. Not a bad trade. Can't complain about that one. Can complain about it a little bit. We kind of got in here. We had to write it up. Well, Elaine, you had 4 contracts short. You would have been up $200. Don't talk like that. Don't talk like that. All right. That was the 131.9. That was that 130.9. That's the golden ratio of the downside. A lot of people very familiar with the 161.8 number, right? But you don't realize there's one going the other direction, which is 130.9. All right, so let's go ahead and delete all those tools and see what we're going to do now. Now we got markets just going sideways again. Is this another 2 times a charm? There's a 2 time a charm. Here's a 2 time a charm. Are we going to get a 3rd time a charm? And then that's where we get a real nice breakout. Who knows? Nobody knows. Nobody knows the trouble I'm in. Let's come and see what else is going on. Oh, look. Good thing we didn't sit and worry about that stupid NASDAQ. Look, it never did go all the way up and touch our yellow line. That's where we wanted to see it go, and it flushed all the way back down. So I think we did the right thing there, taking off our money and covering our red loss. This is a nice break right here. How far do you think that thing's going to go? Do you think it's going to break up, break the previous high? Oh, what happened? I hit the wrong button. Bring this back. We're looking at the NASDAQ right now. I think it's going to go up and cross that previous high right up in there. Wow. Maybe, maybe not. Would that be a day trade or a scalp? Probably a scalp. I don't think we'd really think it's going to go to the moon because it's not being very strong right there. It didn't break our yellow line last time. Didn't even make it up to 21,980. Just not getting lots of beautiful trends in here, are we? Let's go see what else we got going. Let's Russell again. Let's leave Russell alone. This is the S&P, and not a real. I like to trade S&P with options. Not a real big fan of S&P. Just coming in here and trading it. It's a little bit. Just not a fan. Not a fan. That's a 1-minute chart too. Let's go. The one I'm looking for is the Dow. Let's go look at Dow. Ooh, Dow's not doing anything either. Look at how Dow. This thing's too tight. Chart preferences. Where's my chart preferences? Turn this up a little bit. Let's go up to 10. Back over here. Well, that's a little dip right there. That's a downtrend, but do you think it's going to reverse or continue the downtrend? Where's my little downtrend tool? Just like this, up like that, and then a turn and break and a flush back down one more time. That thing's been going sideways. It's trying to break out the bottom of that trend. That previous low is right down here. See that? And it's going to try and break that right now. Ooh, that's nasty. That's nasty. Nasty market. Let's see if it'll give us a little reprieve. There's 1, 2, 3 down bars. Let's see if it'll give us a 4th down bar, and then we'll feel bad. We'll say, but then we'll see if it'll give us a little up bar, and then we'll take the next one down to the 100 or the 130.9. What are you doing there, Lan? Well, we're looking for a downtrend continuation break out of that narrow sideways channel. It's pulling back a little. It's pulling back. I think it's going to flush. We could start building a position to the downside. That's a new Darvis box on the downside right there, right? We know Darvis boxes. It's going to start right, let's say right about here. And we'd say we get a new trend down in here. But we never know because this is the old Darvis box up here. That was a nasty Darvis box. Long, narrow, sideways channel. Is it just going to go right back up into that Darvis box and stay in that channel? Or is it going to break down and go into the next Darvis box down? Let's say it's going to go down. Let's really think that it's going to go down. Let's do this one here. Sell, 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 stop. Wait, those are stops. We're on 99. Oh, I thought I was on 1. Well, that's all right. We'll do this one then. Both of those are blue light. We'll put one of these, edit that. We'll put this down here on ATR. All right. There's my best guess. Give it a shot. See what it does. Are you guys guessing at this market too? Bruce says it sounds good. You like the sound? It's not bad, not irritating to you. John says he thinks the headset's fine. I sat there and I did like a half an hour, 45 minutes of is the best with the microphone here or down here or up here or out here. And I moved the microphone everywhere in all these different locations and did all these recordings to see where I thought the microphone. I think I measured my finger like right there. And to me, I think that's about the best spot. You don't hear me spitting and then it's kind of a little bit farther away from my chin. You think sometimes it would be good right here because in my headset it feels, but then it overpowered the microphone thing. So I don't know. I'm no sound engineer. Come on, baby. Drop like a rock. We got one stop. Are we in with only one? Oh, no, we're in with 2 contracts. But they're both on the, I thought I put them on the yellow light. We'd have been out by now, but we're on the blue light. Blue light's not quite as aggressive. Don't get stopped out as often if we trail the blue light. But you also, when you do get stopped out, it's a bigger stop. Take a bigger risk. This looks like it's going to bounce off the bottom of that Darvis box and start to rally. Yep, there it goes. Rotten little dog. Easy come, easy go. Is it going to go up, come back down, and then give us the next one? Come on. We're not going to get any rallies out of no trends today. Just a dead sideways market in our Thursday afternoon. Oh, look. Comes up, stops us out, and flushes back down. That's Land's luck. That's Land's luck. There's our Darvis box right there. Are you going to come back down in there again, you stupid little piece of crap? All right, let's come in here. ATR stop. What have I got going here? Let's go back up to 1. 1 strategy. Strategy 1, strategy 1. No, that's not the one strategy I wanted. Oh, well, that'll work. Let's try it again. Take another position. I keep thinking we're going to get some kind of a break to the downside into that Darvis box. It's not going. It's not going. Come on, you can do it, baby. Come on, you can do it, baby. This market's just too dead, too dead. We get a lot of dead markets, don't we? It's been flushing. We've been getting a nice little push here. Let's see if it won't continue this going sideways. Bouncing back and forth. We got in at the bottom down here. That's a dumb luck. A poor entry. Come on. Come on. I got such a No patience for these slow markets. What made you draw the box that size, Lan? I eyeballed it from the box the previous size. It was about that big. And I was like, well, that looks kind of. No, no, no. It looked about the same size. So I just did it like that. Eyeballed it. I just eyeballed it. And this is about halfway. And that's all the way. Oh, there we go. But we're not having any luck again. No luck laying. Are you guys having any better luck than me? What are you guys trading? Decarius, it's good to see you. Glad you made it. Good afternoon, Frosty. Glad you made it. I like that graphic you got in there. Looks familiar. Kirk, it's glad to see you. I said hi to John and Bruce already. Are you guys got anything going? Oh, look, here we go. There goes the Dow. Trying to pop down for me. Probably ought to just take my position off as it breaks into there because I got such a bad feel. That's half the profit that damn thing's giving away right now. Clear down there where I'm at, entered to the market. Trying to break into the top of that new Darvis box. That looks like a long drop, Lan. Yeah, see, it's not that long. Not that long. Just change the view. Just change the view. Make you happy. Yeah, see, I should have just taken it off at break even. Just didn't think it had the energy to fall again. It's just doing nothing. We got 15 minutes to market closes. And this market's just being dumb. Just being dumb. We're not getting any consistent flat bottom top bars, flat top bars. Now watch it flush again. I had such a bad entry on that last one. Well, you can't complain over spilt milk. No crying over spilt milk. Look at that thing. Just bouncing off of the bottom of that last Darvis box. Back and forth. Come on. No trends. Guess we need to do a little scalping. Well, we're getting a good rally on some. Just got a notification popped up on my phone, said, "Hey, you're making money over on your currency. That thing's rocking and rolling, going to the moon." I'm like, maybe that's because all these markets are down. We're getting a little bit of a rally here. Russell's waking up a little bit. We got 15-minute bell. Dow's starting to rally. It bounced off of that Darvis box and decided going to go back up. There goes the S&P. What's the lagger? It's this one down here. Let's drop this thing down. Let's go to range bar 6. That's going to go too fast. So this is the lagger. The others have already taken off. Ooh, get in there, Lan. Get in there. Get in there with your lagger. All right, go ahead, lagger. Rock and roll. Take it to the moon. All right. As soon as it makes a lower, oh, that's it. Stupid thing. Okay, we're gonna go again. We're gonna go again. Huh? Huh? Huh, little market? You gonna go again? Break it. Break it. Do it. Do it. Go, go, go. One more? No, no. You're not gonna do it? Oh. You gonna go? No. There we go. One more. All right. All right. Keep going. Get her up there. Get her up there. Get her up there. All right. We got ourselves back out of the hole anyway with that little play. See what it does now. Dug ourselves out of the hole. What's the Russell trying to do here? Russell's trying to get long here too. That NASDAQ, that's the range bar 6. That's a big market moving really fast. So you got to be careful with that one. I'm going to rip your wheels off. Of course, if you play it right, it can make you a little money too. Russell kind of slowing down there. Let's see if we can get a little bit going on the Russell here. Smaller market moves a little slower. It's not quite so scary. Let's see if we won't get a little bit longer position going. Well, are we losing our mojo or are we just getting a little pullback? Is it going to start to rally again? Yeah, Russell took us back into the red. We can't make any headway here. Are you guys making any headway? Kirk says it's a slow day for him too. All right, let's break this thing. Let's break higher. Come on, buddy. Let's do it right here, right now. Let's break those things. Let's break those lines. Break those trend lines. Come on. Come on. Let's get her in there. Come on. No, 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 no. No, 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 no. Time for you to go up. Time for you to go up, up and away. What the heck was that? Well, I guess you can't complain about that. Market jumped like crazy right out from under us. Did you see that? Gave us $185. Boom, just like that. All right. All right. You going to get back in? Well, I gotta wait and see. I don't know. That Dow's looking pretty tasty right there. The NASDAQ's flushing. That was too much too fast. It's going to dump it all out right now. A little too fast. That NASDAQ's a little too fast. We'll try it. Oh, no, didn't want to do it. Didn't want to do it, did it? First candle break new high. Come on. Give me something. Give me something here. Gimme. Don't do that. There we go. It wants to go. It wants to go. There it goes. No, you ain't going. No. Can't decide. It's getting a little excited here at the 10-minute rule. Oh, you rotten little dog. You can't get nothing going, can you? Nothing. You can't get nothing going. Come on, keep it going. Come on. You need a little Viagra? Come on, get it up there. Poor sad dog. Well, it didn't do us any good. We're not making any money here today. We're just getting all chewed up. Nothing wants to trend. Nothing wants to trend. All right. Let's come in here and let's pull up our. So we're going to come in here and we're going to, what's today? Thursday, YouTube Power Hour. Thursday. 180 bucks. 180.00. 180. I think we better know when it's time to walk away, know when it's time to run. Wait a second. How come I don't have my colors over here? Wednesday. That's a red day. That was an option. We're not too worried about that because that was just cleaning up some of our options stuff. Oh, that's not what I want to do. I want to make this a red and then make that white. It's my big red day. And then today was a little green day, so we get to use this color here. All right, we're up 180 bucks on that one. Don't forget to take off commissions and fees. All right. Our goal is $11,000 for this month, and we are only up $1,400. So we're not really doing a whole lot here. So we have to go up here and we go equals this number here. And hopefully you guys now know that you have to do that on your spreadsheet. Did you guys get your spreadsheet? I renamed it the wrong thing. I posted it out there for the guys who have Pit News Magazine's subscription service so you could get these spreadsheets. And I gave it the wrong name. So I had to go rename it. So it works now. So if you need to go and re-download it, try again, it's there. So you can get this spreadsheet. And it's got all of our stuff. It's got the cash cow portfolio in there. It's got the model, so you guys can have one to copy and paste and start using for yourself. It's got the legacy model if you prefer that one. I don't know why you'd want that one. We've changed our whole psychology on these things. ROCC, guys. Remember ROCC? There's our UBI calculator. So we can just kind of calculate, make projections out into the future, how much we're going to be making. And then these are some of the great stocks that we're trading. All right, but this is for us. This is where we're coming in here, and we did a little day trading today here on Power Hour. Tomorrow, we're going to do stocks. We're going to look at our UBI portfolio, and we're going to put in some options. We're going to trade little options. Tomorrow, I think I'm going to show you synthetic long positions. All right, synthetic longs. That's what we're going to learn about tomorrow morning in the stock market. And I have a Sunday school lesson for you. But first, I want to tell you a little bit about the software I'm using in case you want to use the same software I use. Software I use is Track and Trade. All right. We use the futures version today. Go over to trackandtrade.com, download it so that you can follow along with us. And then you can just do what we do. And I'll show you all the settings that I have for all of those tools that I was using for the drag and drop order placements today. And you can trade like us. All right. Come and join us. The stock version, that's what we're going to be using tomorrow. And so get that one while you're there. And we're going to, that's Pit News Magazine. Don't forget to stop by Pit News Magazine, get your subscription so you can get these spreadsheets. Use that code right there, 50% off. We're going to change that. We keep saying we're going to change it. And we're so busy, we haven't had a chance to change it yet. So right now, this special's still going on. You can get it for $19.97 for a whole year. That's 12 issues of Pit News Magazine. That's the club magazine. That's our magazine. 50% off is the coupon code. Use that code, get 50% off. And that's going to get you all of these spreadsheets that we're using here. Plus, this is software. All right. So that is that. And I'm in a bad place here. I want to give you the Sunday school lesson. I have a Sunday school lesson prepared for you. Where did it go? That's not my Sunday school lesson. Here it is. Here's my Sunday school lesson for you today. All right. Plan your trade and trade your plan. Remember, Traders bail out of markets, they don't bail in. Traders accumulate slowly while they bail out quickly. So markets have a tendency to fall faster than they rise. And look at these markets. They have a tendency to rise right now. Markets will always rise once you stop trading. Markets will always make big, nice, beautiful trends as soon as you stop trading. So that's one of the rules that you have on your Sunday school class. Watch this. See, I told you. As soon as you stop trading, markets will make nice, big, beautiful, flat bottom trends, and you will always feel like you're being left behind and left out, and that you are always doing the wrong thing. How do I know? Because I've been doing this for a very long time, and that's how I always feel. Every time I stop trading, I go back and look, and it's like, that's right, when I should have started trading. Oh, well. Them's how the cookies crumble. Look at that. My goodness sakes. Hopefully you guys are smarter than me. And we're able to take advantage of these big moves in the market. Unlike me. Man alive. Look at that. Holy cow. How much money is that? If we'd have just got in on that arrow. $240 for a single contract. Oh, wow. The NASDAQ didn't run. Look at how lousy that thing is. Look at the little Russell down there. He even made a nice trend. Even the S&P moved. As soon as I stopped trading. I mean, literally, the minute I stopped trading. That's called Murphy's Law. All right. We are very much subject to Murphy's Law in this industry. I have discovered. I feel bad. Now I got FOMO. Get in there, land. Trade, trade, trade. Yeah, that's the dumbest thing to do. I go in there and start trying to get in right now. I'll lose everything I've got and end up down red. Oh, crap. Oh, well. That's the way it works. We'll see you guys tomorrow. Hopefully you had fun. If you did, I like it when you give me those little thumbs up. That's always nice to see. Makes me know that we're having fun here at least, and we're learning a little bit. So hit those little thumbs up and leave a comment if you have a comment. And we will catch you guys tomorrow morning, bright and early, 8 o'clock a.m. Mountain Standard Time. Same place, same bat channel. See ya.